So you've hit financial rock bottom or you're close and trying to avoid it. Foreclosure and bankruptcy attorney Teisha Powell joins us today to talk about getting out of the hole. Thanks for joining us today. Of course, this is a very relevant subject considering how many people are going through foreclosure. What do you advise people who are close to the brink?
You know, Brian, there's actually probably close to 7 million homeowners, and it's predicted that probably another 3 more years, most people are going to be seeing the foreclosure rise.
Wow.
So I tell homeowners, if you're already in foreclosure, I would think that you should consider figuring out to come up with a game plan. Can you keep the home, or are there no alternative but you must walk away? If you can keep the home, then contact your lender, speak with the loss mitigation department, and they have options out there for you to hold on to the home. There are programs out there, and if you qualify for one of the programs, then you get to save your home. But if you must walk away, then you need to speak with 3 professions: an attorney, you also need to speak with an accountant because there's tax liability to losing your home in foreclosure, and you want to speak with a realtor who could help you short sale the property, which means the home goes from your name back to a third party with the lender's approval.
Now, we hear a lot about the whole short sale deal. Does that save you some grief in terms of your credit or your debt, or what's the short sale do for you?
Well, it closes a bad door because when you're in foreclosure, you're uncertain, you're not sure if the lender is going to come after you for a judgment, so it does close the door a lot quicker, but there are tax consequences for short sale. So I tell any homeowner who is considering a short sale to speak with an accountant, because it's one thing to get rid of the properties, another to be owing Uncle Sam a lot of money.
Gotcha.
So they want to talk to the accountant about that as well.
Now, what about the mediation process? We're hearing that a lot of banks, even though the federal government has urged them to do so, have refused to mediate with a lot of people and said, no, we're going to take the hard line and keep the property. Are you finding that more banks are willing?
Actually, yes, mediation doesn't really work that well, and I think one of the problem is, if you heard about the robust sign-in, where there was a lot of fraud, the bank doesn't really even know who the decision maker is. So how can you offer probably a loan modification if you can't find who the investor is with the note? And also, too, the reason the banks are not really doing the mediation is because most of these homeowners, if they're not working, you can't qualify for a loan modification. So the mediation was a good attempt, but it didn't work in the long run.
Now let's talk about probably the worst case scenario, and that's filing bankruptcy. What do you urge people about that, or are there considerations that you take into account before you do that?
Well, you know, bankruptcy could be a bad option because you're going to have to start over from rock bottom because you're going to lose your credit score. It's probably going to take you 4 more years to build your credit and obtain a home. But if you have a judgment, that's probably the only option available. If you have a lot of debt and you're not able to come out, then you probably want to consider bankruptcy. There's a Chapter 7 and there's a Chapter 13, and Chapter 13 is a repayment. Chapter 7, you're getting wiped out most of your unsecured debt. You do still have the secured debt to deal with, and also taxes and student loans, they're not wiped out. So I tell homeowners you need to just open up to most options because different strokes for different folks. If bankruptcy is the way out and you can live with not having credit for a couple of years, then you'll be okay.
How long does it take to recover from a bankruptcy?
It depends how aggressive the homeowner is, but I do know that Fannie Mae guidelines, you can't probably purchase a home for 4 years. You cannot file bankruptcy very often, probably 7 to 8 years out. So these are the things homeowners need to think about, because you don't want to file it now and then you have some other financial problems in the future and you need to file again. It's not going to work.
You talk about, and you wrote a book about this, but you talk about this new economy that cash is king as opposed to credit nowadays.
That's correct. What's going on is that most homeowners are trying to do the same thing, or most people are just trying to do the same thing they did before, getting a high credit score, and there's just not much credit in the system. So you may want to evolve the way you think. You may want to go ahead and try saving cash. I know you have to probably get a mortgage for a home and you need a car payment, but maybe a vacation, maybe you could start setting aside money now for vacation in in another year. So I think that people need to evolve the way they think. Cash is probably king now. So rather than do the same thing all the time and get frustrated, try something new.
Is home ownership still the way to go?
Brian, that's a good question. It all depends, because if you don't have staying power, then you're probably not going to be able to hold on to the home long. Gone are the good old days when people were buying the home and then they were flipping them and getting cash in probably a year or two. So I tell homeowners, do not purchase a home unless you have the ability to pay for it and you want to stay in the home for a very long time, over 7 years. And if that's the case and you have a good job or you've kept a job for 2 years and you have surplus reserve cash, then I'd say look into purchasing a home.
Let's talk about this mortgage scenario, 15 or 30 year.
Well, if you want to get out of debt a lot quicker, I would say 15 years, but you have to be very disciplined because the payments are a lot higher. 30 years, you will probably pay less, but you're going to have a debt for a longer time. And I'm saying with the cash crunch, the way the credit is today, I would tell homeowners to probably contemplate taking out a 15-year mortgage. It's doable. You just have to discipline yourself.
Yeah, assuming you can even qualify.
That's correct. But, you know, if you have the tax returns, your credit score is good, your job for 2 years, and you could clear up your discrepancy with the lender, and it's consistent and it sounds believable, then you could be able to obtain a mortgage. Down payment is good as well. So I tell people who are considering to buy a home, you probably want to put 10–20% away. So it's going to probably take a longer time than before. I think gone are the good old days with 100% finances.
100% down, and yeah, wow.
That didn't work well either, because we see the outcome of it today.
Teisha Powell, thanks so much for joining us, and we'll look to have you back again and talk more about this whole getting the property in the right way.
Thanks so much, Ryan. Thanks for having me.